I could like to call this meeting to order. Thank you for joining us during our weekly and hybrid MLS breakfast meeting. My name is Samson Wu, and I hear a little about me. So my name is Samson Wu. So I'm a real estate professional with a background in digital marketing. I speak both Mandarin and Cantonese. I began my career specializing in digital marketing, focusing on Google PPC, Facebook marketing, and SEO. Later, I moved into IT security solution, a software company where I handle accounts for major clients like Samsung and LG. I also obtained my MLO license to enhance my understanding of market dynamic and client needs. Currently, I'm with Pinnacle Real Estate Group, focusing on commercial properties. Over the past 12 months, I have closed 45 million in deals with 30 million of that in commercial. For fun, I enjoy playing badminton, snowboarding, mountain biking, and explore new places. And that's a little about me. I think that's too much. Thank you. Now, help me to welcome our moderator for today's panel, Johnson from Budget Blinds. He'll be introducing our panelists.
Thank you, Samson. Welcome, everyone. Just to let you know, at the end of this panelist, we will have 10 minutes for question and answers. So keep your answers towards the end, please. I'm going to have each one of the panelists to introduce themselves briefly. And we can, just so as you know, Lena had a car flat tire. So I want to thank Judy for stepping in at the last minute and introduce yourself.
My name is Judy, Chow. I'm a loan officer. I've been doing loan for over 30 years. I'm stepping in for Lena because she had a flat tire. I wish I had her figure, okay? I don't look like her, but I mean, I'm happy to be here. Thank you.
Hi, Nathan Chung here from Dunmor. Dunmor is a construction lender. We mainly focus on owner-occupied investing lending. So yeah, happy to talk today.
Hey, Benjamin Zhang with Harvard Small Business Finance. We are SB lender. I help small business owner to purchase or refinance owner-user commercial real estate.
My name is Glen Kangas. I'm a residential real estate appraiser. I've been an appraiser for 31 years here in the San Gabriel Valley. My company is GA Appraisals, Inc. And I think Lena, she drank a fat tire and couldn't come is what it was. I think you got the story wrong. So.
All right. So let's get started with the question. Judy, what happens to the mortgage rate after Fed's meeting on September 18?
Many of you know on September 18, Federal Reserve dropped 50 basis points. That's the Fed rate, which means if you have credit card or other type of loan that's related to prime, that dropped right away 0.5%. The long-term mortgages, which is you buy house, actually was already built in the first week of September and the second week. So the lowest rate within that period was 5.125 for a 30-year fix. After they dropped the 50 basis point, actually now climbed up to 5.375. And they said, why is that? Because people buy the mortgage bond security based on the rumor, and then they sell when it happened. So but it's still very low rate. Today is 5.375. So the question is, how low can they get? We expect the Federal Reserve between now and in the spring, maybe drop total 200 basis points, but sometimes things change. But because there's an election as well. So if that happens, we might have rates in the 4.75 for the long-term mortgage, hopefully. But I don't think your buyer should wait. They should probably just capture this very good rate right now. Okay, thank you.
Thank you, Judy. Nathan, how does the short-term dropping interest rates impact the residential real estate market for home buyers?
Yeah, so to piggyback off what Judy said, right? We saw a 50 bips decrease. That affects stuff like the prime rate, but as Judy mentioned, it doesn't really affect too much as the 10-year Treasury note, which a lot of mortgages are tied to, right? The 10-year Treasury note is based off of a bunch of other factors than just the Fed rate dropping. So this 50 bips decrease has been already built into the market. So in my next questions, I'll talk about what the majority of the population is locked in at currently, and I'll give ratios as to what they're locked in at to showcase about people that want to refi or people that want to get into new housing. Either you're doing it from an investment perspective or much more of a immediate need, such as family increase or job relocation. In the immediate near term, I don't see 50 bips really, and it's sad to say, I don't really see 50 bips changing the market too much in 2020 and 2024. But yeah, that was there.
All right, good answer. Benjamin, why do small business owners want to purchase a commercial property for their business?
Well, purchase a commercial property for their business allow them to build equity over time. It provides stability and control over their space and also fostering long-term planning. Moreover, owning a commercial real estate comes with a significant tax benefits, such as deduction for mortgage interest, depreciation, and property tax. Business owner can customize their environment to meet their specific needs without seeking landlord's approval. So additionally, owning a property can generate rental income for leasing extra space, which diversifying their investment portfolio. Though the initial investment may seem steep, it often leads to a long-term saving compared to leasing. Finally, there's a personal satisfaction in ownership, and it can create a lasting legacy for a future generation.
Okay, Glen, does the buyer commission changes affect appraisals?
No,
No.
no, I'm just.
That's a short answer. Okay, next.
Yeah, the buyer commission thing, the biggest thing I can say on the appraisal side of it is don't call it a concession, even though all your brokers are telling you we're going to call it a concession. So a concession is something we remove from the sales price and lower the value in an appraisal. So don't call it a concession. The other thing that you want to remember is if you have the buyer's agent paid outside of the transaction, the sales price is going to be lower. So when that's a comp, it's going to make the data suggest lower values for properties. So the thing that I would focus on with your sellers is focus on the net. So you need to focus on the net and not focus on whether or not they're paying the buyer's agent commission. On the appraisal side, though, at the moment, it's not affecting appraisals so far.
All right, back to Judy. I forgot that she represents a AAA capital investment, right? All right. So question number 2, what is the housing market prediction for the year 2024?
Well, actually, we're still in short supply. If you watch the news, in China, there's 1 million houses that can be sold. So the government is trying to give all kinds of incentive, low interest rate. But the more they give, people are waiting to get lower price. Here, we're actually short in the whole United States, 3 million properties. We're actually short. The developer are not building, enough houses. So we are short. Why are there? You see the market slow a little bit, as you know. Why are people waiting? I think they think the rate will go down lower. Also, they think maybe price will drop. You have to remember, if the price does go, rate do go down lower, there'll be a lot more offers. You're going to compete again. Like remember 2020 and 2021, it was like 20, 30 offers. So what happened is I think the housing market should be stable still in the United States for the rest of the year. Thank you.
Okay, Nathan, what overall affects mortgage rates? How does this relate to the Fed rate?
Yeah, so there's everybody in this room should know about the indexes, right? For us, or a lot of the banks that do construction loans, or a lot of loans for, in fact, we base our off the Wall Street Journal Prime. And when there was a 50 base decrease, that immediately affected Wall Street Journal Prime rate. It went from 8.5 to 8 flat. That being said, that a lot of the construction loans that week probably got a 50 bips discount if your bank allotted that or subprimed that. But this Fed rate isn't directly tied to a lot of, first-time home buyers or people, getting a 30-year mortgage, right? That's, as we said, is tied to the 10-year treasury bond, most likely, right? And that, sure, it is affected by the Fed rate, but we have to look at things throughout the year, such as investor confidence, monetary policy, even treasury note, auctions, right? We have to look at overall, right now, the main thing for the past year everybody's talking about was inflation. Now that inflation is closer to 2.5%, the main scope of view is job growth, right? the Fed is doing everything they can to avoid massive layoffs and job numbers decreasing, right? And in order to avoid that, they have to decrease interest rates. So I think, the 50 bips was great. Hopefully we see 3 more quarter bips, mean that in 2024, we'll hopefully, fingers crossed, we can see a 1.25% overall decrease to the Fed rate. But it really is up to the job numbers, and that's the main thing we should look out for.
Okay, good. Benjamin, what is the benefit of having an SBA loan?
Well, getting a SBA loan to buy owner user commercial real estate, it comes with a lot of perks. You only need about 10% down payment to buy a commercial building. That's mind blowing, and which helps small business owner to keep more cash for their business. And the loans typically has a longer repayment terms, up to 25 years. So their monthly payment is manageable. Plus, they can get great rates. In this environment, interest rates are on downward trend. For qualified clients, their rate will be in the low 6 fixed rate. Since SBA guarantee a portion of the loan, it is easier for clients to get approved, even though they don't have a perfect credit. So all in all, it's a smart way for a small business owner to purchase a property with SBA loan.
What effect do ADUs have on value?
Not as much as you want them to when you're selling them. So ADUs obviously are a big hot topic. I've given several presentations on ADUs, and the 2 things that I will say about those are, number one, the values of ADUs are continually increasing because people are looking to them as an opportunity. But it's also the present value of the future benefit. So to build one, to try and make a profit off of building one and selling it with a property, you're not going to get the true costs back because the benefit isn't immediate. The benefit is over time. So if you're renting out the property and the ADU, and it can generate $2,000 a month or $3,000 a month in income, nobody's going to pay $300,000 for that because it takes 7 to 10 years to get that money back. So they're going to pay something less than that, and it depends on how big is it, how new is it, where is it, is it an area where you can rent. What are you using it for too? There's people that build ADUs for other reasons besides renting. So, so just be careful if you've got a seller who wants to build an ADU and then sell a property. They're probably not going to get the money back immediately in value. The benefit is long term, right? The benefit is what you can use it for, what you can rent it for. So an owner user, it's great to do, but for someone who's like selling or flipping, to build one for that is not great. There is a new law coming out that's being considered right now. I don't know if it's passed yet, but AB 2533, any non-permitted ADUs built after 2020, they want to streamline the permitting of those to make it easier to get it permitted if it wasn't. So be on the lookout for that as well.
Okay, great info. Back to Judy. How do lenders help buyers or sellers with the current real estate market?
So usually, the buyer will call me to make sure they can buy a certain price range. So we do pre-approval. We check their down payment, if they have all the down payment or it's coming from gift or maybe from China. So they have to prepare the down payment. And then we look at the income document. So if their income document doesn't fulfill the full document, which means tax return or W-2, we can do easy qualify. So there are many, many ways. And of course, their credit. So we help them prepare the buyer that way. Seller, if we don't usually talk to seller that much, but if we did, we'll tell them they can help credit the buyer for this closing cost. I just did a transaction for I think San Fernando Valley. Of course, I didn't see the seller, but I noticed the seller credit 30,000. It's for 1.2 million for closing costs. This is quite a bit. And so the buyer can buy down the rate, get a cheaper rate. Okay, thank you.
Good. Nathan, well, this question has 2 parts. First part is, what are the golden handcuffs in the real estate industry? And the second part, how do the golden handcuffs correlate with interest rates and the current real estate market movements?
So yeah, this question is fun because I want to give you guys data points, right? I want to give you guys information on the market that my team and we usually just peer through in our weekly presentations to each other as well, right? Everybody in this room knows what golden handcuffs are. They're tied to something that the market incentivizes you to be locked into. And in this conversation, we're talking about interest rates, right? If your interest rate is at 2%, 3%, why switch a house? Why would you be incentivized other than, a family issue, family growing, family changes, right? But here are the data points that I want to share with you guys, right? And this is based off of the Federal Housing Finance Agency report that we update ourselves, monthly. Of all the homeowners nationwide, 41% have no mortgage. That means only 59% of homeowners have a mortgage. Now let's par that down a little bit more. Of the 59% of people that do have a mortgage, 77% of these have a mortgage below 5%. 58% of people have a mortgage of 4%. And below 3%, it's still a staggering number at 22, almost a quarter. So we're in this room talking about interest rates being low and spurring the market. And it's sad because I don't want to be a pessimist, right? I don't want to be the type of guy in the room telling you guys that, yeah, the 50 bips, it's not gonna be as implemented. There's not gonna be a market frenzy, but sadly, that's the case unless we see significant dips, right? Like I said earlier, there's three more chances for the Fed to drop, and it's predicted that they're going to do 25 bips, a quarter percentage point. That being said, 2024 will only probably drop down maximum about 1.25, given the 50 bips decrease here. That doesn't really touch the 77% of people that are locked. 77% of people locked in at 5%, right? That just covers them. We would need to see another percentage decrease from there to even touch the 58, the more than half that are locked below the 4%, right? This doesn't affect our firm as much since we're just trying to add to the supply, being a home builder, lending, financing company. But we do like these numbers because it gives us data points to show to you guys about what the current market's at.
What is the difference between SBA loan and conventional commercial loan?
Well, SBA loan and conventional commercial loan differ in a few key ways. With an SBA loan, you can get a lower down payment, typically 10%, and longer repayment terms. However, they take longer to process and need more paperwork. So make sure to work with a very experienced SBA lender to avoid any delays. On the other hand, conventional commercial loans, typically their down payment are higher, around 20 to 45%, and they have a shorter terms, typically 3-year fix or 5-year fix. Rarely you see 10-year fix. And it is harder to get qualified for with more condition and clause, including in the loan agreement.
Can I give the appraiser comparables?
Absolutely. That's one of the big things that people, actually both appraisers and agents don't realize is we actually can talk before the appraisal's done. So I always encourage you to meet the appraiser at the property. Don't send your assistant, meet the appraiser, and make sure they have everything needed to do a good job. You don't know if they're going to send an appraiser from far away or an appraiser who's new. You have no idea. So make sure that you want to give them comps, great. The most important thing is information on the comps. Agents have the information we need as appraisers to do a good, thorough job. So if you make sure they have that information up front, you're much less likely to have an issue with the appraisal because they didn't have what they needed. It's also important if you have a unique situation, your house is bigger than public records, maybe we need permits, or if locally there's something that's a big deal as far as location above or below a certain street, location in a school district. Make sure the appraiser is aware of that. Don't assume that they know that or understand that ahead of time. So the more factual information you give the appraiser ahead of time, the more likely that you will have the less likely you'll have an issue with the appraisal. And you don't need to tell the appraiser, I need, the contract price for value. We already know that. So you're not allowed to say that, and you don't need to say that. The one last thing on that, I would definitely make sure the appraiser has the most up to
You just ran out of time.
has the updated contract. A lot of times the lender sends us the original offer and no counter offer. So we think it's an escrow at 1.2 and it's an escrow at 1.275. We need to know that. So make sure the appraiser knows the final contract price.
Perfect. Last question. Judy, how do lenders help real estate agents with current real estate market?
Lenders can do open house with the real estate agent. So at the time, get out flyers, so what the current rates are. Also talk to the potential buyers. Also, they send out newsletter or social media. I send out newsletter weekly on the rates and different program. Mostly we help the agent to pre-qualify the client. Some clients are new. They walk into open house and you really don't know they want to buy, but you're not sure they can buy. I usually get calls on those on Sundays because they have people walking in. So we do pre-approval and then pre-qualify for help the agent. Thank you.
Perfect. Nathan, last question. What are some long-term outlooks and predictions impacting the real estate market for home buyers and investors?
I think the main thing right now is just looking at job growth data, right? The Fed is happily, they won't say it themselves, but they're pretty confident that inflation settled, will be settling at 2%. So the main thing they'll be looking at from now on is job growth data. So whenever we see the job growth report, hopefully, it's good for everybody, but at the same time, if it's bad, then they're gonna have to put more, pressure on interest rates. Yeah.
All right. Last question for Benjamin. What is the basic requirement to get an SBA loan to purchase an owner-user commercial real estate?
First, their business must be a for-profit business in the US. So no church, no non-for-profit organizations. So must be a for-profit business. And the property must be at least 51% occupied by the business. So their business has to occupy 51% of the property they want to buy. And also the client should have a decent FICO score, typically over 650. And also they are ready to show their business financials, income statement, balance sheet, and business tax returns. And also business owner must be a US citizen or permanent resident. At down payment of 10% typically is required. And that's it.
All right, perfect. I'm keeping score here. So we have another 5 minutes left for questions and answers. So if you have questions, please come to the mic because the Zoomers need to listen to your question.
Any questions? No, I got a couple of questions. So Glenn, I know you mentioned that one of the main factors of appraisal is the price value. If we were to narrow it down to the three most important factors, what are the other two?
The number one is location always. That's never going to change. Number two is the square footage of the house, right? People are looking for a certain square footage, which will accommodate the number of bedrooms they want. The location obviously is school district, things like that. And then the next thing is lot size, right? How big the lot is makes a difference. So
is there anything that generally an agent could provide to you that, you might miss that you think is crucial?
The biggest thing on that is the level of upgrading, when upgrades were done, especially the not visible things, electric, mechanical, things like that. Solar, if people have solar, we need to know if it's owned or leased, those types of things. And then permits for any area that's different than public records. Public records can be wrong, but everybody hinges on public records. So if you have an extra 500 square feet, where did that come from? Is it permitted or not? The banks are going to ask that question.
Yeah, that's really helpful because I know a lot of agents don't know that we can actually talk to, appraisers and what information do you provide, right? So those three are really important. Price, make sure you have the right price, and then, yeah, any upgrades, any improvements in lot size, et cetera. Another question, anybody, any other questions from anybody?
Any questions on the chat or on
Then let's wait.
Zoomer?
I think it's more of a comment than a chat, question. If interest rates drop very low, like in 2020, then buyer competition with 20 offers and overpricing offers, putting many home buyers out of reach. So it's not only interest rates. Okay, so going back to interest rates, is it correct to summarize that the most optimistic situation for the end of this year is at most interest rates will drop about 1.5%? Is that correct understanding?
We're probably gonna stay at 5 by the end of the year. I'm talking about next year. I think we're gonna stay at 5 by the end of this year. It's not gonna drop.
Okay.
I don't think so.
At
It's
5.
not that fast.
I see. Okay. And then so you were saying that, given that if we're not dropping the interest rate that quickly and but some buyers could potentially buy down rates, in your experience, how often does that happen?
Not that much. Sometimes usually the builders does a buy down rate, but the homeowner will give them, yeah, like I just did one, they gave them 30,000, but that's very unusual. The seller's going to give them 30,000. That helped to buy down the rate quite a bit. It was a high balance. They bought down the rate to 5.625, but that's very high balance. Usually they're above 6. So they gave them money for buy down, give them money for closing. So that's possible if seller is willing to do that.
Is there a, if I give a buy down of 1%, 2%, what is the direct correlation to the interest rate?
Usually 1% they get about a quarter to 0.375 better.
So it's not a direct,
Oh, no,
exactly,
it's not 1-to-1.
it's not 1-to-1 or,
You just tell them if you pay 1 point, you might get rate between quarter to 0.375 better. So if you give them, if you're a seller, you give them 2 points, they can buy down quite a bit.
okay,
So you're a seller, right?
correct. That's what I was asking. So if I were to give a 2% concession on the interest rate,
Well, it's not.
no,
you
no,
give them money.
on the buy down,
Yeah.
what would that represent to a potential
Yeah, on
buyer?
your house, you probably have to give them 30,000. Just
Okay,
kidding.
bring a buyer.
Other questions?
No more questions? All right, so let's give them a good hand and thank you so much for coming out today. No, I just said thank you. So back to Samsung.
Thank you, John. All right. Please join us next week as we welcome Deputy Commissioner Julia I'm sorry, the California Department of Insurance. Her topic will be Insurance Crisis Update. Thank you, everybody, for joining our meeting today. Have a wonderful day. This meeting is now adjourned.